Yet again, another IPO hits the market, this one being Zinka Logistics, also known as BlackBuck Limited. In this video, we will cover the business overview, IPO details, the market opportunity, followed by the financials of the company, peer analysis, and lastly, the valuation. Now, to start off, BlackBuck is India's largest digital platform for truck operators, with nearly 1 million truck operators using the platform in fiscal year 2024. The BlackBuck platform comprises 27.52% of India's truck operators. Now, in terms of services, the platform helps operators streamline their operations by offering digital solutions for payments, for fueling and tolling, then telematics, which is vehicle tracking, driver monitoring, followed by load matching and marketplace, and lastly, even provides access to financing for the purchase of used trucks. Now, just to show you a snapshot of their offerings, they offer services like BlackBuck FastTag, GPS, marketplace, and so on, streamlining the entire process of truck logistics. Now, if you look at the revenue breakup for fiscal year 24, about 42% or 1,272 million of revenues came from commission income, which is a commission margin from FastTag partner banks and OMCs, all oil marketing companies, followed by the subscription fees of 1,178 million used for the telematic services of GPS and fuel sensors. Now, others include the interest income from loans given and amounted to 8.3 million in fiscal year 24. Now, in a nutshell, BlackBuck's platform, through its offerings, helps operators simplify their business, increase efficiency, and boost profitability in an increasingly complex industry. Now, lastly, one of the highlights of BlackBuck is that it is backed by marquee investors like Flipkart, Goldman Sachs, Peak 15, IFC, and several others, as you can see on the screen. Moving on to the IPO details, the IPO will open from November 13th up until November 18th, 2024, with shares listing both on BSE as well as NSE. The price band for the shares is 259 to 273 rupees. Retail investors can start with a minimum investment of 14,742, translating for a minimum lot size of 50 to 4 shares. BlackBuck plans to raise 1,114.72 crores, out of which about 49.3% is towards a fresh issue of 550 crores, while the remaining is an offer for sale, which means the existing promoters and shareholders are selling off their shares. The IPO has reserved 10% for retail investors. Now, so what are the objectives of the issue? The company proposes to utilize the net proceeds towards funding the following objectives. Firstly, funding towards sales and marketing costs. Then, investment in BlackBuck FinServe Private Limited, its NBFC subsidiary, for financing the augmentation of its capital base to meet future capital requirements. Third is for funding of expenditure about product development, and lastly, general corporate purposes. What about market opportunity and the future trend of the industry? So, India's logistics sector is experiencing rapid growth driven by significant infrastructure investments and digital innovations. Now, government initiatives like the Bharatmala, Gati Shakti, and dedicated freight corridors are modernizing the transportation network, while digital technologies like FastTags, digital fuel cards, e-way bills are streamlining the operations. As a result, the sector's efficiency is improving, leading to faster and more effective logistics solutions. With increasing demand from e-commerce and manufacturing, India's logistics industry is poised for further expansion. And guess what? Road transportation dominates the logistics in India, driving about 46% of logistics as of fiscal year 24, forming the bulk of logistic expenses and emerging as the largest and most significant mode of transportation. Now, talking about the trucking industry specifically, it stands out as a vital component of the nation's logistics sector. With approximately 12.5 million trucks and about 3.5 million truck operators as of fiscal year 2024 traversing Indian roads, the total freight value through the trucks has witnessed a steady growth rate of 8 to 9% CAGR over the last 4 years. And this growth trajectory is expected to persist over the next 4 years. Now, given the complexity of trucking operations and several challenges, an operator's oversight can significantly impact profitability. Therefore, managing ownership beyond a few trucks becomes increasingly cumbersome. Thereby, the trucking industry as a whole offers vast revenue potential for companies that solve challenges and inefficiencies and enhance value for truck operators. In context, the Indian trucking sector is a 18 to 25 billion revenue pool as of fiscal year 2024 and is expected to be up $35 billion by fiscal year 2028, keeping BlackBuck in a sweet spot. Now coming to the financials, BlackBuck has demonstrated consistent revenue growth over the past few years. From fiscal year 22 to fiscal year 24, it has grown at a CAGR of 42.3% and recorded 316.5 crores as of fiscal year 24. This is driven by its expanding user base and innovative technology solutions. Now, if you look at the bottom line, while the company has historically reported losses for the last 3 fiscal years on the back of employee benefit expenses and expenses related to manpower and agency services. However, it has made significant strides in improving its profitability and hit the road of profitability in June 2024, recording 28.67 crores. At the same time, BlackBuck has been actively raising funds to fuel its growth and recorded borrowings of 161 crores as of June 2024. Now moving on to pure comparison and valuation. Zinka Logistics Solutions, or rather BlackBuck, provides a platform for payments, telematics, loads marketplace and vehicle financing services. Currently, there are no like-to-like listed companies in India or abroad that engage in a business similar to that of Zinka. However, the company has mentioned some companies as its peers, considering similarities with certain offerings of its business in its RHP. Since the earnings per share is negative for fiscal year 24, it does not facilitate the calculation of PE ratio. Now coming to our last segment, which is strength and weaknesses. Let's start with the strengths. BlackBuck is India's largest digital platform for truck operators in terms of users, having over 413.34 million transactions for 9,63,345 annual transacting truck operators in fiscal year 2024. Moreover, they served 27.52% of truck operators in India. Next, with their unique platform, BlackBuck has amassed a vast network of truck operators and shippers, giving it significant market presence. This has led to a strong network effect of platform, resulting in robust customer retention and higher monetization. Now, the growing e-commerce industry and government initiatives like Bharatmala and Gati Shakti initiatives support logistics development, offering significant growth opportunities. Lastly, the company's asset-light business model enables rapid scaling and expansion through its in-house technology. Now talking about the weaknesses. A part of the business model is dependent on business partners in the payments and vehicle financing offerings. If you see the image, for payments, the company depends on oil marketing companies through whom they provide fueling payment solutions and issuer bank partners through whom they provide FASTag. Furthermore, financial partners for vehicle financing. Hence, the loss of any such partners may adversely affect their business and results of operations. Now, a major chunk of revenue comes from the payments and telematics offerings, amounting to 92.7% of total revenues. Any negative impact on these offerings could materially affect their business, result of operations and financial condition. Now, the operations of the company encompasses tolling, fueling, prepaid payment instruments, vehicle financing and privacy and data protection. Any changes in government regulations could impact the company's operations and profitability. Lastly, BlackBuck's business depends on the overall economic conditions that impact freight volumes and truck capacity. For example, any fluctuations in road transportation industry and fuel prices may impact freight volumes and truck capacity, which in turn could adversely affect their business, result of operations and financial conditions. Now that you have a comprehensive understanding of the IPO, make an informed decision. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.